Assalamu alaikum. Being bearish on Ethereum is one of those calls where if you're right, it's going to make you look like a genius, but if you're wrong, it's going to make you seem very foolish. This is because amongst most investors in the crypto space, it is basically at this point a given that Ethereum is a good long-term investment. And we're not talking about just retail investors here. Even sophisticated fund managers are bullish on Ethereum. Take, for example, Ark Invest. In their recent Big Ideas report, they projected a near 60x increase in the price of Ethereum over the next 10 years. Now, as someone who is much more skeptical about Ethereum's long-term prospects as an investment, although I am bullish on Ethereum's price in the short term, and I'm bullish on the smart contract technology in general and the role that it's going to play, I wanted to review Ark's reasoning to see if perhaps I've missed something. So that's what we'll be doing in this video. Before I go any further, if you are new here, my name is Rakan Kayali, founder of Practical Islamic Finance, where we try to help people globally build wealth in a halal way. If you'd like to follow my crypto and stock portfolios, you can do so by becoming a member. Link to do this is in the description of this video. Make sure to drop a like if you appreciate this type of content, and subscribe and hit the notification bell so that you're notified whenever new videos are uploaded. Now let's go over Ark Invest thesis to see how they got to this pretty elevated price prediction for Ethereum over the next 10 years. Ark's argument for Ethereum is basically as follows. Smart contracts are filling the role of traditional financial functions, and it is likely that this trend continues as it is becoming increasingly clear that decentralized finance can scale and operate much more efficiently, as is evidenced by the average revenue per employee in decentralized services versus centralized ones. So if you look at the slide that they provided, and let's say you compared the revenue per employee for the New York Stock Exchange versus that of Uniswap, you can see the clear difference in favor of Uniswap, implying that it's much more efficient as a service provider than the New York Stock Exchange is. Also, DeFi governance, which tends to be managed through decentralized autonomous organizations or DAOs, has many advantages compared to its centralized counterparts, especially as it relates to transparency and having tighter feedback loops. Now, up until now, I'm basically on board with everything that Ark has said. The issue comes when they get to their conclusion slide, which is that they conclude Ethereum's market cap could exceed 20 trillion in the next 10 years. This is because they argue Ethereum could displace many traditional financial services, and its native token, Ether, could compete as global money. As financial services move on-chain, decentralized networks are likely to take share from existing financial intermediaries. The beneficiaries of the shift include Ethereum, the base protocol, and DeFi, the decentralized applications built on top of Ethereum. As the preferred collateral in DeFi and the unit of account in NFT marketplaces, basically they're referring to the fact that NFTs are priced in Ether. Ether has the potential to capture a portion of the 123 trillion in global M2, and M2 is basically a measure of the money supply. So they're saying that Ether could capture a significant portion of the global money supply. Now let's evaluate Ark's thesis. As I mentioned, I'm on board with Ark's thesis up to basically this last slide where they have their conclusion. I do think the world will become increasingly decentralized, and I think finance and other functions will start to evolve to use smart contracts that don't require a trusted intermediary between contracting parties. This seems clear to me. The trend of products and services transitioning from being online to on-chain is one that I think will continue for many years to come. However, to conclude that Ethereum's token, Ether, is going to appreciate because of this, 60x is a leap in logic that I don't think is adequately supported. That is, the conclusion doesn't necessarily follow from the premise. Now, to their credit, Ark did say Ether could reach a market cap of 20 trillion, which is perhaps the weakest linguistic form of any forward-looking positive statement. They didn't say that it was probable, they said that it was a possibility. And a lot of things are possibilities, especially if you have a 10-year time horizon. It's also a possibility that during this time, the Ya'juj and Ma'juj start popping out from China. However, the reasons why I think Ether's market cap growing to 20 trillion is rather unlikely are the following. First off, you have competing layer 1 solutions that are already much better in terms of speed and transaction costs than Ethereum is. As it relates to Ethereum's upgrade to 2.0, which is basically promising to solve everything, including the elevated transaction costs and slow speed of transactions, I have a hunch that the journey to 2.0 might be a lot better than the destination. Right now, everyone basically discounts any shortcomings of Ethereum because, after all, they're all going to be solved once the 2.0 upgrade happens. When the 2.0 upgrade actually happens, this logic will no longer be able to support Ethereum. There seems to be two possibilities for when Ethereum 2.0 comes out. Either it disappoints and Ethereum's share of the total smart contract pie shrinks even further, or Ethereum 2.0 delivers and transaction costs actually fall on the Ethereum network to competitive levels. Now, let's assume transaction costs on the Ethereum network fall to the levels that they are currently on the Avalanche network. So currently, transaction costs are around 10 cents per transaction on the Avalanche network. So let's assume Ethereum's transaction costs fall to this level. Currently, the transaction costs on the Ethereum network are close to $30. So if the price per transaction were to fall to 10 cents, this means that the price will have fallen by a factor of 300. And now the question that I ask myself is, wouldn't this mean that demand for Ethereum would fall by a factor of 300 too, given the same transaction volume that is? In order for demand for Ethereum to stay the same, the volume of transactions on the Ethereum network would have to increase by 300 times. And I know that burning tokens, which reduces supply, should make up for some of the reduced demand, but will it be enough? I mean, it seems to me the ideal state of Ethereum and basically all layer 1 solutions is for transaction fees to be as small as possible. Therefore, wouldn't it make sense then that demand for these native tokens of layer 1 protocols drops as transaction fees drop? Further, wouldn't transaction fees dropping also affect demand negatively on account that these transaction fees are what is distributed to stakers as rewards, or it's a good portion of what is distributed to stakers as rewards? And if these fees drop, rewards for staking will drop as well. And so there will be less incentive for people to demand tokens so that they can stake, and there will be more incentive for people to unstake currently staked tokens because the rewards aren't as attractive now. So this would further decrease demand and also increase available supply, and as a result, provide an added headwind for Ethereum's price. Now, I'm just thinking out loud here. This is one of those fields where I'm still learning. I'm trying to wrap my head around everything that is going on. I honestly could be very wrong in my analysis, but I have to invest based on what I understand. And this current understanding that I have on the workings of layer 1 solutions is causing me to not want to buy any layer 1 tokens, including Ethereum's token. So if you see my crypto portfolio now, I basically don't have any layer 1 tokens in there, aside from Bitcoin, which is a commodity and not a smart contract platform. I will let you know if and when my understanding here changes, but for now, this is my understanding, and it's an aspect that I don't see addressed at all in Ark Invest's recent analysis. That is, they don't exactly mention what market share Ether will have compared to other competing layer 1 solutions and why they think it will have this market share. They also don't address at all how Ether will make up for the loss in demand that would result from transaction costs falling. Price-wise, I think Ethereum will continue to perform well So long as the 2.0 upgrade hasn't happened yet. However, when it does happen, eventually, I think there is very little visibility into what the price could do from there. So a short-term position in Ethereum may perform well. A long-term position, however, is much less assured in my opinion. This was my analysis for whatever it's worth. Make sure to do your own due diligence before you make any investment decisions. If you'd like to follow my crypto and stock portfolios, you can do so by becoming a member. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.